In participating in today's panel on real assets, opportunities, and risks, it was great to have the opportunity to speak about a recent study that we did at Hancock Natural Resource Group looking at including timberland and farmland into a mixed asset portfolio. In particular, we looked at North America information, which has a long history of performance data, and it showed timberland and farmland have performed better on a risk-adjusted basis than the typical assets in a mixed asset portfolio for pension funds. We also took a look at the diversification in relation to the correlation between timberland and farmland and traditional equities and fixed income. The correlations are weak to neutral for equities and negative for fixed income. The fundamental drivers of timberland and farmland are really the reason why these correlations are neutral to negative. Timberland and farmland don't necessarily respond to increases and decreases in interest rates, don't respond necessarily to political and economic cycles. Our study really found that timberland and farmland are quite resilient during economic cycles. Timberland and farmland move again to their underlying fundamentals, which is overall growth in markets for primary goods and services, shelter and food, and the increasing population drive performance in timberland and farmland. Right now in particular is an opportunity time for Brazilian pension funds to think about investing in timberland. When we think about back in 1985, when Hancock began investing in timberland with institutional investors, we were looking at the same type of environment of low interest rates and the inability to be able to pay our long-term liabilities in the US. Timberland was able to serve a function very well as it's resilient through cycles in the economy and a growing asset class in Brazil.